before I delete my chart, I'm just going to show each little technical that I used on my chart from yesterday, and just I'm going to delete it all before we jump into support resistance. This was the start of New York. This was all of Asian. Start of New York. We came down, swept liquidity. We literally did the same thing that London did pre-New York right here. We got a strong push down, correction, New York opens. We get that same exact push, almost to the T, same exact volume of movement. 76 points. We measure this one. What is it? 74, 75, 1 point off. So both areas swept into liquidity, and then overall we saw break of flow, order blocks get created. Fair value gaps created. Quasimodos, bearish engulfings. Support and resistance really goes interchangeably with all these technicals. You can, like, let me pull up on a 15-minute time frame to show this example. So this was my previous day Asia high. You can see both of them red lines. This was 2 days ago. This was yesterday, a day ago. What? Okay, don't touch. I put Bluey on. What's wrong? What happened? Okay. Sit down. Get ready for school. So this was Asia's high for the 2 previous days, and then we had last night's session. So just using that as the example, the previous day Asia session would be back here. Asia's high is here. So Asia starts again at 7 o'clock, which we see right here on this candle. And I know it gets a little confusing with all these technicals on the chart, but when you know what each one is specifically designated for, what each one means, you know, this is my trend line from a higher time frame down to a lower time frame, and on this trend line, not only do you see it get respected 1, 2, 3, 4, 5 times, we also see it get broken, retested, and then a nice follow through. So simply why we don't use any one indication, but I would use this trend line break, previous session high, a sweep of liquidity that had a order block created with fair value gaps being created on the way down, break a flow, break a structure here where we're looking for that trend line to confirm the breakout. So yeah, all these little things that we combine and confluence with one another is how you can build up into a trade idea, not just necessarily taking a sell off of this trend line. No, we would be on the 15-minute time frame. We could box in this move right here off this fair value gap. Drop down time frames, move over. So obviously Asia came in session here, so that's why we saw this sweep of liquidity to the high side before price came back down. Was just simply because, and again, I'm adding more onto the chart, but it doesn't become confusing when you know, like, okay, this line is Asia's start. So Asia starts, we see a rally to the upside with no break of momentum until these 2 candles right here. So break of flow didn't really happen until right here necessarily. Break of flow, we get an order block creation up here. The order block gets broken and slightly retested right here and almost again. So, you know, you can start jumping in with these confluences and start stacking them and adding them. Don't see an equilibrium. There's fair value gaps all the way down. So that was a 15-minute fair value gap that I drew on the higher time frame, and then we're on 5-minute time frame now, so we can start looking for smaller ones. But the only one I see that gets interacted with is this one, very small one. However, it still gets interacted with, so it still becomes viable. So let's add all these confluences together and start stacking it up into the trade idea before we jump down to a lower time frame to look for entries. So again, we had Asia start, we had a liquidity sweep, we had a break of flow. Inside of that break of flow, we had a 15-minute fair value gap, and then we had a 5-minute fair value gap get created. Inside of all of that, we got a break of structure that happened back here when price came down here and broke this, but we're not going to add that into that yet because we're looking for the entry confirmations before, but this would be a continuation confirmation because we see price break the structure that it was maintaining on the higher time frames. We broke it, we're trying to shoot lower on the higher time frames. The lower time frames are going to give us two significant pushes that look separate, like this is one push and this separate push, but on the higher time frame it's going to be built into one candle, so you'll see new structure points get created. So continuing on, we get another break of flow right here. So we had 1, 2, 3, 4. Let's count these up. Asia start, liquidity sweep, that's 1, 2, break of flow, retest of that break of flow, break, retest, follow through, fair value gaps, 4, there's a Quasimodo in here, 5, and then bearish engulfings on top of the next break of flow that we see off of this fair value gap. So let's get into it right here. So obviously when this is getting interacted with here and here, this is when we're going to start looking in on the lower time frames and seeing what's going on. And both are right inside of Asian session. So again, we're just seeing Asian session do two things. So what it did was break that trend line that I was referencing. We broke it. This was considered a follow through, but we couldn't maintain under it, so we're not gonna use that as like our confirmation yet. So our next break, retest, follow through, same thing happens. We can't maintain under this area. So I've seen two follow throughs to the downside, which just gives me heavy confirmation that we're gonna want to sell in the near future. So once we get up to this blue line, this was a premature sell, obviously because price came back up before the real push. But we have broke this trend line, so this retest and this failed follow through right here would have gave us a signal to wait for the sells. If we were already in the sells, we could have closed or kept our stop losses at a breathable point so that we didn't get taken out of this trade. But just for visual example, if we were in this trade and we were running tight stop losses and we're up almost 9 points and price rallied up against us, we would get taken out of this trade unless we closed it or moved our stop into take profit, whichever happened first. So in this example, let's say we moved our stop to be on take profit, so no matter what happened, which if we're following the rules, that's what we should be doing, when price comes back up, either we took profit down here and then whatever positions were left open got liquidated in take profit. So when price came back and rallied above this trend line, we see two things happen, and this is where our thinking brain's got to come on, because we have to start looking at price as individual candle when these areas of price are getting interacted with, because we know they're significant and we know they're going to tell us what direction it wants to go in. So we get this break above, get this one big break above, so giving us our breakout point, which would be literally this point right here. This is our breakout point until we see two black candles preceding the blue candle breakout. We know the push has halted. It's stopped. Like, that's the end of the break. So we have break, retest, follow through. How do we signify these and read them on the chart? Break would be this. Blue box is our break, or blue circle is our break, and we broke the trend line. We broke a previous day high, and then we broke back above. Well, this line right here was our stop loss, so that doesn't really. We broke back above the break of flow that initiated our trade in the first place. So all eyes are on, are we going to maintain this break? So we get the breakout point. That's literally the breakout point to the candle. Once we get that second black candle back to back, which is right here, these two candles start the retest. When these candles start the retest, price pulls back, and that is your retest. While the orange is your retest, we're doing the same thing. We're looking for two blue candles to start the follow-through process. We don't get that until these two candles right here. These two candles right here started the retest. These two candles right here started the attempt to follow through. Two things happen. Two things happen. We can't break back above our stop loss, which would be significant because there's probably other traders in the market doing the same thing. So when we see price halt at that order block, that tells us that resistance is now stepping in the market. Okay, so now that we've used all these other confluences that we're breaking down, session-based volume, trend lines, previous day highs, transition, failed transition, reading raw price action, now that we've done all those things, we've come to this point, we can start looking at, okay, we see this area of resistance that gets formed right here. On top of this area of resistance that gets formed right here.
Daddy.
What, baby girl? Yeah, in a second, I'll come over there and put it on, okay?
No.
1 minute. Give me 1 minute, okay? So while we see resistance get created right here,
Yep.
price also created support immediately right before that resistance was created. So support was created here, resistance was created here, price came down, broke support, came back up, retested the resistance, and then followed through on the break of support. So again, following all these other confluences that we just pointed out, on the higher time frames, the fair value gaps, X, Y, and Z, this would be an optimal trade entry right here. Not only because we could have bagged 8, 9 points right here, got stopped out, whatever, amateur moves. We know the banks, especially during Asia session, the Chinese governments and financial institutions and everybody you can think of that comes from smart money is trading in the markets at these times. And it's that simple. They're trading in the markets these times. They want to make money. Everyone's trying to make money. This is what the technicals are telling us. We're not using fundamental analysis by any means. We're using literally purely technical analysis to tell the story. While understanding that fundamentals do play a part of it, we're not using any fundamentals at the moment to build up our trade ideas. It's that simple. So you could have gotten entries off of any area. The break of the trend line, that brought price back into sellers territory. You could look at this fair value gap fill that gets, obviously broken, retested, and failed follow through. So you could be looking there. You could look off this resistance. If you entered early on the break, if you entered late on the follow through, like wherever you enter, it really doesn't matter. The point is don't let fear of missing out stop you from taking trade entries. So if we use a late entry and this is our trade setup, we're entering on this attempt to follow through, and our stop loss is right above our resistance line that we just drew on the 1 minute time frame. All of our other technical analysis have lined up on the still minor time frames, but from the 15-minute back, we're building up a better picture of what price is going to do interchangeably between the hours, because we're using, like I said, the 15-minute time frame to build our trade ideas. If we wanted to build trade ideas for the next couple of days, we'd be looking at the 1 to 2, 3, 4 daily, weekly. Yo, baby.
You have mommy phone.
This is my phone, baby. I'll go turn on your cartoons in 1 minute, okay? So again, just flowing with this linearly with the same trade setup that we just came from, literally an hour before this. We're gonna be aiming for the same take profits. Like we're building up this trade idea. So we had a 5.8 risk to reward over here on this trade setup. Go pee, baby. Turn the light on.
Go with me.
Okay, turn the light on. Turn the light on and wash your hands when you're done. So, and initially, all of this brings us back to these breakout points that we got follow-throughs on, but price couldn't maintain under. So while we're still aiming for our previous take profit that we had on our last setup, we'd also be aiming for these attempts to follow through, and we'd be looking for a real follow-through at this point. Again, reading price for what it is. When we do break out of this area down here, this was the follow-through that we were looking for. I can tell you two things. One, this was the retest of this breakout point. This was the breakout point. So when we get this retest and price tries to follow through, and at this point we don't get a follow through, price has told you the breakout point. You're in profit 19 points, but floating around 15 points profit because of that wick activity. That's smart money entering and exit the market in an instance, and that's what's happening on the minute candlestick. This 1 minute candlestick is seeing an extra 4 points of price movement because off these sells that they just stacked up over here, sell, they're not getting liquidated on stop losses. They're keeping their sells and they're building up their positions, and when price drops, then they're exiting their trades. And again, if we're looking at if we're looking at the basics of technical analysis, then we'll understand that when we get this breakout point and we get the retest, and then we do get a follow through on candle closures, but on wick and real breakout points, we don't get a follow through. The follow through is all the way down here. So when the follow through completes on these two candles, 1, 2, 1, 2, the blue candles end the attempt to follow through. Again, the same game starts all over again. We're looking for a break of flow. And if we're in the sell, we're looking to exit our trade. And if we were looking to get back into the buys, we're looking for technical reasons to get back into the buys. And this is where it gets juicy, because if you can perceive this end of breakout, we get the break of this breakout point, the blue line that we were looking for. We get the breakout, we get the retest, 1-2 candles, retest, and then we get the attempt to follow through all the way down here. 1-2 candles ends the attempt to follow through, but we didn't follow through. Well, we know price is going to start breaking and retesting to the opposite side, because we're going to either look for a better price point to bring price to this follow through, or we're simply just going to keep retracing back to higher points until price wants to come back and interact with those levels. So the levels will always be significant, but whether price wants to come back to those levels is synonymous to what you're trading. So in this trade example, we see the same thing happen. Same thing happened that built these trade ideas up. So if we exited those trades, $1,500, $2,000 in profit, got a nice order block right here. We get a breakout of this order block and a nice retest of it. Price comes right back to it. We would use this last black candle as our order block creation. Pull it down if we want real premium price. Entries. This is just refining the same area, but bringing it to where smart money is entering the market. We get a break of flow. We get a retest of that break of flow. And if we closed ourselves, entered on the buys, and flowing if we flow linearly with the price, we're able to understand that our last previous levels are our new take profit. So ironically, we entered back here late. That would be our new take profit on the buy. Our stop loss would be a nice 1.1 or 1.1 point, and we'd be targeting about 15.5 points. And that's a beautiful risk to reward setup. And then the same thing starts to happen. This area that we broke, retest, and followed through, we come back to revisit it, test it, and now this is starting to become a failed order block. This failed order block turns into what? A breaker block. And that's exactly what we see. Bring that breaker block over, build our buys into our sell positions that we just took, and guess what smart money's doing? They're loading up the bases again. Because why would they not? They just made a couple grand. They made a couple tens of grands. Hundreds of grands. We're making pennies onto what they're making. Nobody should be in the bathroom. Hey, yeah, this. Thank you. Nobody should be in the bathroom. What's that noise? Baby, get out. Come on. Hey. Come on. Very quick. Thank you. Don't play. We're not playing right now. Stop it. Guys, knock it off. You're going to school. You gotta get ready in a little bit. You want something to eat? What do you want? You want some fruit? Or you want some cereal? Again, flowing with this, we see this breaker block. That was a failed order block. Get retested. On top of the retest, we see a break into that zone. We see a retest and then a failed follow through of it. We get another attempt to follow through. We failed to do so. Inside of that, we start to see break of flow. We get order block created inside of the breaker block. A lot of bearish engulfings going on. Quasimodos. No equilibriums from what I see. And there's a nice one right here. So, okay, that's very beautiful. So, let's add up the confirmations. We got Quasimodo, bearish engulfing, order block, break of flow, equilibrium, fair value gap, retest of the fair value gap, breakout. We got the initial sell setup that's adding confluence to all of this. So, we got like 9+ confirmations to what's going on in price if we're entering in the markets. Again, choose your poison. If you want to go off 1-2 confirmations, if you want 5-6, if you want those 9, it's all up to you. But the 9 confirmations come over here, stop loss here, targeting again previous draws of liquidity, which was the breakout point that we were just referencing about an hour and a half prior to that. Again, this is all Asia session, so this is all Asia territory moving these prices. Excuse me. And again, we have these areas on the chart marked out. So this was this trend line that we were referencing that I drew on the 15-minute time frame. We had this trend line, and I like this trend line for 2 reasons. Because I used another trend line that was all the way down here to kind of build a more relative visual of the same trend line, but with what price was doing at that exact moment. So at this point in time, on October 22nd, the trend line was trending up for almost a day, half a day. And by the time we got here, we got a break of that trend line, so I would need to update it for new interaction. And again, you just see price shoot away from it. So the reason I drew this other trend line was because I seen all this wick action going on, and I wanted to capture it. And the thing about trend lines is they're not the all-tale of everything that's going on, but when you add that trend line into everything else that I just built in over here, it's much easier to see why the significance of it every time we get the creation of it here. So if we're interacting with it off the creation of it, the first creation gives us 30 points of movement. The second touch of it gives us 57. Third touch, 28. Fourth touch, 38. The break, retest, follow through of it. So now we can use the opposite side of it to start, measuring how much price is moving off that. And then this one move, 40 points, a retest, and then if we count this whole move that initiated the push, 73 points. This is the best visual representation of a trend line that's being drawn, get flipped, and all that buying pressure gets dumped up upside itself. And while the biggest move to the upside was 57, the downside move, like I just showed, had a 75-point push to the downside because of how much pressure was being built up inside of that one trend line. So, and again, it was all off this blue trend line that I revised and drew another one off of. And that's why it just simply ends here, because I could extend it all the way over here. And it still has significance. They're 2 separate trend lines, but interchangeably are of the same area, just edited for new price interaction. And off this trend line, what we see on lower time frames is it's a beautiful thing. Like when you start to understand these things, because we see a break, a retest, and a failed follow through right here. And while we see this failed follow through, we see an attempt to follow through again, and then we do see price overshoot over here. And this was actually our first real break of the trend line that was going to tell us the story later on that night. And I like that this happened pre-Asia, and then Asia opens, and then Asia follows through with, a 70-point push off this break of this trend line. And it's just something that once you can start to see the little bits and pieces that are being put together, you'll start to understand why every little detail can matter and will tell the story of what's trying to be done. Any day, anytime, any session can get it, because, like I said, that's what price is doing. So again, I jumped out time frame just to show that trend line. And the areas of liquidity that we were looking to draw off of this sell. And the reason that we're aiming for these areas of liquidity is because, okay, I just gave you 9 confirmations on that sell, right? We're going to build into that even more. So, we stretch. This is all last night, dude. This is everything that happened last night. And that's why I show it, because if you think this isn't raw fucking trading, like, this is literally what's fucking happening right now. And the other thing about it is, America is so fucked up right now with everything that's going on, like the way that they're fucking manipulating everything. They're manipulating the stock markets. They're manipulating the government. They're manipulating society. They're manipulating everything they get their fucking hands on. So the thing I love about this is when you trade gold, the United States isn't the single hand in gold, so you can kind of get away from all that manipulation that's happening in the United States specifically, and start to see the manipulation that's happening economically as like an entire world. That's as simple as I can put that, but it's the truth. So again, running off these cells, we're going to start drawing these areas of liquidity. Previous day London, previous day Asia, lows specifically. And ironically, those trend lines are drawn off what? Asia low, London low. Price interacting with those trend lines as Asia's meeting with London's open. So let me draw London open on there so you can get that visual. London opens at 2. So now that we jumped into our cells, we got our confirmations. We're 9 deep on confirmations. We've already got profit taken on 2 other trade setups. We could have taken a 3rd trade setup on the buy. And this is just where trading becomes trading. So we're aiming. Yes, beautiful. We're aiming for. Stop! Don't touch! Don't touch! Don't touch! We're aiming for that London draw of liquidity, which is going to give us a nice 1 to 25 risk to reward. Stop! Please stop! I'm not going to ask you to stop. I'm asking you to stop, baby. Stop. While we're aiming for those other draws of liquidity, we just have significant points drawn off, and that's what the black line is. It's a significant area of liquidity that wants to get interacted with. I don't know exactly what it was back over here, but I could go back and do my research and find out. I just don't know exactly. How beautiful. A previous Asia order block that had a Quasimodo inside of it, a break of flow, heavy bullish confirmation. All I can say, right? So now I know what that line right here came from. Let me text that as yeah. LA9. Yeah. Just so we know that that's that area that I'm referencing. So yep, look at that. So when we do our back research, we can stay on the 1 minute time frame and know yeah is the area that we were, interacting with at this moment in time. So off these cells, we could look to take profit, close out all the trades, move our stop loss into deep take profit, and then start to look to build into the sell even more. Because if one thing's going to happen, London's going to open up and London's going to want to jump in on these moves. So they're either going to take price back up to where it just came from, meaning London opens, we get draw liquidity, it's going to want to bring it back up to where it came from, or it's going to jump into the market, add with Asia sells, and start targeting the previous draws of liquidity, which was previous Asia session lows. And again, that's what we see. Again, this black line is some significance. I don't know exactly what. I can jump over here, and again, we see. Again, it's another Asia. It's another Asia interaction. We got this line specifically is a draw of liquidity. It is inside of Asian session. It's an order block inside of a fair value gap. Inside of that fair value gap, we have a quasi. Inside of that quasi, we got engulfings. So that's what that line like signifies, and it all happened inside of Asia. So while we're still inside of Asia and London, let's bring it back. Bring it back. Bring it back. So while we know what all those areas were on this last draw of liquidity, we can do our reading of price again. So we get a break of that.
motherfuckers to shoot each other. That's what they want. Donald Trump wants political violence.
So while we see price interact with those new levels of liquidity, we can start back with our basics of transitional states and failed transitional states, because we know that we're at a new level of liquidity, and we know that price just fucking meowed. So we stayed in those trades. Crazy risk to reward. Not only crazy risk to reward, potential to add and build into those trades. I didn't throw them on the charts. They're right here. So let's back it up just a little bit. All right. Let's show this nut buster what we're really about. We're going to use our previous draws of liquidity, and we're going to use our transitional states to mark out what's going on in here. So we're not entering in these buys. We could if we want. If you guys want that, I mean, I'm not going to enter the buy setup. I'm just going to show you what the fuck the buy setup look like. Buy setup look like something like this. Break up low. Order block created. Order block created as fair value gap inside of order block. Order block fair value gap inside of that. That creates a new fair value gap that gives us the most relative area price. Relative area price brings us back to understanding that we're inside of a retracement. The retracement lets us know that, hey, price is just simply pulling back to find a premium, so that premium can then take price lower. Okay? So, again, we're going to use our little special line to draw the resistance that gets created. Because, hey, if we get a break of our liquidity line, and that break shows us a retest and a follow through, don't we want to know where the top is? And don't we want to know if we should be expecting a drop or be adding into the buildup of the move? Cool? Following? So, even though we get this breakout point, this is a breakout point. The breakout point doesn't end until right here, because we get our retest. Our retest, which would be this little guy right here. We get a retest and a follow through. So, one might be thinking, hey, we're long, we're buying. So when price comes back and simply pulls back, we're entering buys. And even though you would have did that, you would have thought two things happened. Still would have been able to profit. Not only would you have been able to profit, you would have been able to liquidate your position and protect your capital. So when that happens, oh, silly me, what happened? My trade got stopped out. Damn it. Okay, now what are we doing? We're looking for break of flow. We're looking for reasons to stack ourselves that we were already doing. Cool. If you fucking suck at retracement trading, then your ability to understand when the retracement is over would significantly impact your ability to enter the market, because you would understand. If price is failing to do something, and there's only two options, I'm going left or I'm going right. I'm failing to go left, meaning I'm not going left. If I'm failing to go left, guess where I'm going? Right. If I'm going right and I fail to go right, and I only have two options, where do you think I'm going? To give you that visual, if I'm going left, and I tell you I'm no longer going left, where does that mean I'm going to start going? Okay. Where do we see that happen at? Failed. Quasi, failed. 4 fails. Inside of 4 fails, we get our first break of flow.
Daddy, me help.
What's wrong?
Daddy.
What? Oh, can you take it? You scared me. Let me help you. Come on. There, it's on. Alright, go watch. Hey, stop. Silly girl. What'd you do? Okay, I'll get you cereal right now, babe. Go sit down and I'll get it for you. So we get a break of flow right here. Breakout, retest, no follow through. Retest, no follow through. technically this would be a follow through of this breakout, so we would simply be looking at this area that got broke now because we broke retest. Failed to follow through, failed to follow through, failed to follow through, failed to follow through. But inside of all of that, we got this break of flow, and while we were failing to follow through on the break of flow, we broke down, we broke up, and we're failing in both directions. We broke, so we're trading sideways. So while I said there's only two options that we can do, we'll know when price is not doing either one or the other. We're simply moving sideways. So if you want to capture that sideways movement, double top, double bottom, draw our consolidation, accumulation. That is simply the third option that price can do. So I lied. If I don't go left, if I don't go right, there's a third option. I don't do anything. Kind of just stay where I'm at. And that's, again, what's happening. We went left. We told you we're not going left anymore. So we stop. And before we change directions, we're telling you we're not going left one time. We told you, hey, we're not going left a third time. A fourth time, we said we're not going left, give you a Quasimodo, and then give you a fourth validation that we're not going left while standing still and not doing anything. Inside of all that, we've confirmed. We've confirmed a breakout to the downside. We did reject. We did reject to the downside. But inevitably, we see price rally and give us one final break of flow that tells the whole story. And all this is inside of a retracement move. So this retracement move is really not shit to the entirety of it. But this is how nitty-gritty fine that this shit is, and it works. We get a failed order block right here. Failed order block turns us into a breaker block. Same thing, just failed order block turns into breaker block. Breaker block. If we were entering in the market off this breaker block, this break of flow, any one of these Quasimodo, it doesn't matter. I'm showing you, I would say, late entries, if you will, because I'm trying to give it from an amateur standpoint, not oh, you're dropping sells on these fucking wicks, you're reading it like a fucking dog, you're sniping a fucking bee off a dog's ass. Like, no, that's not what I'm not trying to build unrealistic viewpoint of it. I'm trying to show the technicals that apply and where smart money would enter the market and where we should be entering the market. So smart money's entering the market at 1:51 in the morning, and it gives them 30 minutes of entries, and and 35 minutes later we get our confirmation entries that start to validate everything that's going on. Chill out, take the time to build into that trade idea. I just gave you 9 confirmations back here. London opened. We get a failed transition again here. And we see London's ability to enter in on the market, and we have strong draws of liquidity to the downside. Don't complicate it. Don't complicate it. Just sit on your hands and wait till the banks tell you what they want to do. And that's at these points in price right here. When a breaker block gets created and a fair value gaps get created off that breaker block, and then you get 2 strong draws of liquidity off that breaker block, that's where you enter with a very strong stop loss, because hey, yeah, we're risking money, we're trading. You're trying to make money. The byproduct of trying to trade properly is making money and losing money, just like going left and right, up or down. That is what we're doing. So while we're entering on these markets, we're still following through our initial breakout points. Guess what? Price broke, retest, couldn't follow through this breakout point. Where was the breakout point? Where was the failed follow through? The breakout point was this fucking guy. The failure to follow through it was everything below it. No candle closure could close below that breakout point. I just gave you, this is a break of, let me draw it out again. We got a consolidation zone. We got a breaker block created. I mean, not breaker block, order block created on top of that consolidation zone. We got a Quasimodo inside of that order block. We get a retest of that order block. We get strong equilibrium on the draws of liquidity that brought us above this level, aka the premium selling points. And then simply put, when we see this right here, this is a perfect entry. Literally, couldn't emphasize this entry anymore. Order block, Quasimodo, break of flow, engulfing, equilibrium, fair value gap, breaker block. What else do I need to fucking explain? Enter on the equilibrium. Just one. Enter on the equilibrium, targeting the previous draw's liquidity. 10 points, cool. But we also know that Asia's down here, and we're going to be targeting Asia too. 1 to 20. Price moves with us. We can either snag a second entry here, or leave our initial entry open and just let price ride. Once price pushes down 5 points, 10 points, you should already be past break even. You shouldn't even be risking any money at that point. When price drops down for an additional 20 points, you simply are hunting the end of the breakouts, looking for the retest and the failed follow-throughs. How do you spot it? Look at the oppositions of the candles. Where do I see two blue candles that ends this breakout? From here to the breakout point. Where do I see two candles that end the momentum push? We broke support. Inside of broken support, we get a retest and a follow through of that. Where does the breakout point end? Off of this broken support. Actually, off of this broken support, off of this draw liquidity, off of this draw liquidity, where does the breakout point end? I'm going to draw a few colors on the chart and let you decide. That's up to you. Does the breakout point end here in the orange box? Does the breakout point end here at the yellow box? Does the breakout point end here at the blue box? Or does the breakout point end here at the red box? 4 options. We're breaking support, liquidity, another area of liquidity. We broke all 3 of these. Where does the breakout point where does the breakout point end? And where does the follow through begin, or the retest begin? So inside of all these breaks, our retest would have been started. Are you ready? Here. If we're reading raw price action, the story would be a little different. If we're flowing linearly with price, this would be where the retest was initiated, because the retest would have been these 2 blue candles. Ironically, where that retest is, we get an area of resistance that gets created, and we get our attempt to follow through. On our attempt to follow through, we simply could not close beyond this breakout point. The inability to close beyond this breakout point is the validation of our exits. Let me repeat that. The failed transition, after all of this has happened, is our reasoning to exit the trade. Not only does it become our reason to exit the trade, it becomes the reason for the next move in the market. You can start it all over again and do it every time, same way, same direction, nothing changes, the same setups apply. It is your ability to read the price, interact with what the price is doing, and your ability to enter and exit the market at those price levels is going to be the determining factor, and if you're profitable or if you are not profitable as a trader. And in this industry, there's 97% failure rate. It is because of the inability to understand these basic fundamentals of technical analysis. It is that simple. It doesn't get any simpler than that. There's nothing else I could say to change the narrative of that. It is simply what it is. So if you need one more clarification on all this, you get a break of flow. Inside of that break of flow, we get an order block. Inside of all of that, we get a bunch of consolidation. Why are we getting consolidation? Because we just came from a huge bearish move down. This would be our area of consolidation. We're looking to sell from the top and buy from the bottom. Again, rolling off of I don't want to say it in a negative way or put any type of negative intent behind what I'm saying, because I am very much so the same thing. But the amateur. Hey, what happened? Why do you keep hurting me? Get the chair moving. Hey, what happened? You fell? You fell. Go move the chair over there. Listen to what I'm telling you. Are you okay? Did you fall? You want cereal? What do you want to eat? What do you want to eat? What do you want to eat, okay? You want grapes? Okay. You don't want cereal? You want cereal? Come here. Come here. Where is it? Jackson, guys, stop. Go sit down and chill. I'll bring you your cereal. What cereal do you want? Show me. No. You want milk or no? Here. Get up. Here. Dash, you don't play with them. Eat them, babe. Again, flowing with our confirmations. Order block, failed transition, break of flow, retest of order block and failed transition, Quasimodo, bullish engulfings. Quasimodo's right here if you don't see it. Bullish engulfings, right here, right there, right there. Fair value gap, breakout point to the opposite side, retest of that breakout point. Again, 8, 9 confirmations off of raw price action using. This is reading raw price action. What I just showed you right there is reading raw price action. Reading pushes, retests, and follow throughs in a linear fashion is simply just looking for the opposition of the candles to break the sequence. So if we're pushing down, I'm waiting until I see 2 blue candles to end this push down. If I don't see 2 blue candles, then this push is the push is one. It's one. It's of one. There's no separation of the push. The break, the push, it's one until we see the 2 candles. So now let me put this over this chart. The push would have been from the previous 2 blue candles, which was that blue dot that I drew up here. So this would have been the push. So again, flowing with our example, this is our push. The retest is the 2 blue candles until the opposition happens, which is 2 black candles, creates start the series of the start of the series of break, retest, follow through. The third part being the follow through. Right here, our third line would be significant for the follow through, and you can see it. I'm not going to draw. This would be right here, and then the follow through would end its attempt down here with failed candle closure beyond the breakout point. um, and that's how we would read this failed transition as what it is failed transition, because price simply couldn't close beyond the breakout point. And we simply saw price turn around, break flow here, breakout point, giving us a new breakout point where resistance was created, also giving us the creation of this accumulation zone. And then we see this process start all over again. So inside of the accumulation, we're going to see, breaks of flow to both sides, because price is trying to decide what it wants to do. So the break of flow would happen again right here when we get a break, which was the failed follow through again, the retest, and the failed attempt to follow through would be the creation of the right shoulder of the Quasimodo. On top of the creation of the right shoulder of the Quasimodo, we get the breakout point or the break of flow inside of the creation of the right shoulder of the Quasimodo, and the follow through attempt outside of the accumulation zone. Outside of the accumulation zone gives us a new breakout point. The new breakout point gives us new creations of resistance. While retesting all of those areas that I just signified, we have 2 areas that we can target. Once this break of flow gets, back established, we get a fair value gap created. Even if we shouldn't be entering from the tops of these consolidation zones, we honestly should be entering from the bottom no matter what. So I'm going to signify that this was an easy trade setup for amateurs to get into the move with smart money. To simplify it, like, it was just as simple as that. This was an easy move for amateur traders to get in with smart money, because we could enter there and we could also stack a position there, and that's what smart money's doing. So if we did that, we'd have 2 positions entered. Very nice stop loss, looking at $25 or $250 on this setup, and then looking at $12 or $120 on this setup. And I say that very synonymously, but very differently as far as the numbers go. They're very different. They're very large number gaps, from $1,000 to $100, or to a couple dollars to a couple $100. But it's to show that it doesn't matter if trader A has $100 or if trader B has $1,000. Both setups are significant to the ability to jump into the market and make money. What do we have for time? I don't know how long. Oh, that's 53 minutes. Okay. This pretty much wraps up almost Asia London session. So let me finish it off over here since we see price die down. So this was a great example of using all technical analysis and fundamentals to use as our GPS and trading. I would say mentor or educational camp, whatever you want to fucking call this shit. Whatever you want out of this shit as far as education and knowledge goes, it's being presented to you every single day as the market prints itself. So while both of those trade setups were very nice, we were targeting the the breakout points, which was here, and then we would be targeting the previous draws of liquidity. So this break was the last, or was the actual break that started this whole push down. So we would be targeting the initial breakout and then that area, because it's where the previous draws of liquidity were. So while targeting both of those areas, we see that price was able to get a little bit higher, and simply put, price just wanted to come and interact with this order block, breaker block that was created right here. So we get a failed order block, turn breaker block, and inside of that, we get 2 things that happen. Let's look at our series of break, retest, follow throughs, and then start to untwine the rest of this move, because I don't know, that's not significant. So breaker block gets created. Refine it a little bit. breaker block gets created, breaker block gets interacted with inside of these buys. These buys show a breakout, a retest, and a slight follow through, can't stay above it, slight follow through, can't stay above it. So we're just simply going to interact for new price. We're going to edit for new price interaction, and then we're going to look at it linearly as price came up here as a breakout point, failed to follow through, attempt to follow through again, we get an overshoot. This overshoot would have been a great point to refine our order block, because it would show us where price was actively in that market hunting out draws of liquidity. So inside of hunting out those draws of liquidity, what do we see? Quasimodo. This is the 1 minute Quasimodo, and then there's other shit going on outside of it. This is not technically the left shoulder. This left shoulder would be right here. Get a push down, get our push down, and we get our final push down right here. Technically, this would be the creation of it, but the creation of it leads us into the next Quasimodo, which is right there. So if you see the Quasimodo, it does get printed funny, because as it's being created in the moment, that's how the banks and institutions are interacting with each other. This is how London is interacting with all London institutions and hedge funds and banks and blah 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 blah. That's how they're interacting. That's how they're communicating with each other, is through these Quasimodos and through these series of technical analysis. So while we see the break, retest, failed follow through because price cannot maintain itself above this, we simply see the order block, breaker block get interacted with. Those areas get taken out, and then we can see the break of flow somewhere right here. So when we should be exiting these positions, it should be once we see this break of flow, price is coming down here hunting these, we see this literal break, and then price comes up, fails to follow through, maintain itself, which can be seen through this red line. You see the breakout point, failed follow through, failed follow through, failed follow through, failed follow through. On every single failed follow through is your attempt, or is your opportunity to close your sells or your buys and start looking at the sells. So no matter where you get in on it to exit, as you can see, the price went for 16 points. You'd be exiting with about 13 and a half to 14 plus points. So risking 2 points, not risking 2 points, but 2 points is getting taken off of these trade setups simply because smart money is entering and exiting the market so quickly. So yeah, it's your ability or inability to notice that is going to drastically affect your ability to catch those extra 2 points or lose them. So inside of all these breaks of flows, we get this breakout point, and we get a follow through of that breakout point, which would have signified an attempt. This would signify that price wants to go lower, that we broke, retest, failed to follow through. Okay, so we're going to interact this break of flow for new price interaction, and to catch the break of this one, because this is the breakout point that is going to take us lower. We retest it, and we get the follow through. Not only do we get the follow through, price comes all the way back, retest for one more final, hoorah if you want to get in on the trade, amateur traders. If you absolutely missed out on all these trade setups right here, you had 2, 3, 4, 5 more entries right here. You could have waited for the break below the flow. Nice stop loss, and you'd be targeting the previous draws of liquidity, and you would have been then targeting the draws of liquidity that happened all the way back here off the previous sells. So the previous sells that were had, they failed to follow through. Price retraced. Once price retraced, found its premiums 1, 2, 3, 4, 5. If we're entering on amateur setups, because that's what we are. It's not a shot at anybody. We're targeting the previous draws of liquidity, and inside of those draws of liquidity, what do we see? I can pull this over. This was the. Let me put this over. This was literally what price had to follow through to complete this breakout point that initially was had. This is literally the order block, and all we see is price come down, attempt to follow through, not follow through. So to read it in more of a linear sense, we get a breakout point, retest, failed follow through. This is when reading the sequences versus reading raw price action is going to come and handy, because why would you want to sacrifice a 20, 19 to 20 point move and be sitting in profit at 13 points because we simply couldn't read raw price action? So let's read this very clearly, because we know that these draws of liquidity had the same interaction. Price could not do its thing down here. It just immediately pushed away. So now we're going to read raw price action when price is coming into these areas, because we need to understand what price wants to do. What do we see? We see price come out here, breakout. The red is the breakout. This one candle is the breakout. We attempt to follow through on the second candle because we got a retest of the breakout. At this blue dot, this was the retest. Break, retest, attempt to follow through. All in one candle. Because when this attempt to follow through is not had, let me erase this so you can see the wick. There is no wick. It's a very slight one. This is an attempt to follow through. Whether you want to understand it or acknowledge it, however you want to see it, this is a breakout. This is an attempt to follow through. This is failed follow through. This is failed follow through. Inside of all of that, you should be able to exit your trades. You can exit your trades absolutely 100%, but to do it with conviction will be to do it with understanding that this is a breakout, a retest, and a failed follow through. Failed follow through. Same thing starts to happen. Order block gets created. If I was simply going to pull these back and draw them for new price interaction.
Hey, Daddy.
Yes, baby.
I want something else.
Okay, hold on. We're gonna get Leo ready, and you ready for school in a minute, okay?
No!
Don't cry, don't cry. You got time. You can still watch TV, okay? You still wanna watch TV?
Yeah, I
Okay.
want to stay here all day.
No, we're not gonna stay here all day. You can come back in a little bit, okay? And then we'll hang out when you get back, okay? Okay?
Oh, please don't leave me.
Don't please, don't leave me. Don't cry. I love you so much.
What are you doing?
Just recapping Asia session. So these two zones are just drawn for new price interaction right here. This was being the breakout point that price needs to follow through and failing to do so. And then the yellow box would be significant to the order block that's created or edited for new price interaction from here down here, because that's where we see a break of flow. Inside of this break of flow, is also the retest. Inside of the fail follow through, we get a break of the flow, we get a retest of that broken flow. Order block retest, fair value gap created. So absolutely, if you weren't out of the position at the low areas, I would say, if you're not exiting off the break of flow, the retest of that break of flow, if you're not exiting anywhere near there, I would exit the last point at this creation of this fair value gap, because it's going to save you as much profit as possible without sacrificing it because of late exits, or so closing. Oh, look how price just interacted. That's pretty nice. Missed this move just because we were over here bullshitting, but that's dope, because this is gonna show something very powerful right here. I love that we end the video on this. So we're gonna get fair value gap creation that's telling us, okay, this price is retracing, but it's also showing some type of support being created that's going to hold price up, and that can be seen through this fair value gap that gets created and then retested. Inside of that, we can start hunting our draws of liquidity and our breaks of flow. So break of flow happens here, break, retest, follow through, interact for new price interaction. We get a break of flow, retest, failed follow through, and we can see the break of flow on the downside right here. Order block, breakout, retest of that order block. Fair value gap created, filled, interacted with, and inside of all that, we got the breakout point, the retest, the fill of the fair value gap, Quasimodo, and price just hauled off for about 35 points off that. So all off the 1 minute time frame, showing all technical analysis that apply hand in hand, day in and day out. We saw this buy move simply just come in at New York Open, aka when London and New York sessions overlap. The ability for both sessions to push volume is much easier because there's more traders in the market, and you see it happen right here from the break back above this draw of liquidity. Obviously, we wouldn't be looking for entries until these fair value gaps get tested and filled, and then our draws of liquidity, our take profit, would be the previous draws of liquidity that we just came from, previous session lows that we already took out. That was Asia session yesterday. 10:24.